We made it to the end of the trading week at least, and it's been a long day for you, Joe, but welcome to the show. Joe Fahmy, Managing Director of Zor Capital. Great to see you.
Thanks for having me. I really appreciate it.
All right. Well, we are going to talk about the market, of course, and some trades that, Joe, you recently made or maybe are in. We'll break down all the details and some fun stuff as well. But let's kick things off with how you are now positioned after this week's market action. I mean, pretty brutal for tech, the NASDAQ breaking support, but your one sentence reaction of how you've pivoted with the market action this week.
Defensive. They said one word.
Yeah, you're not the only one. Everyone else.
Don't fight the Fed. Just be patient. There'll be plenty of opportunities later this year. Just have to wait for this rate hiking cycle to end.
Yeah, definitely got to roll with the punches and listen to the market. Okay, and now for some fun rapid fire questions for you. Your favorite board game?
Favorite board game?
As a kid,
As a kid, Chutes and Ladders was fun.
Chutes and Ladders?
Yeah.
All right.
I would say Monopoly, but that's too boring. Sure. Chutes and Ladders is fun, I would say. I haven't played a board game in at least, I don't know, a few days now. No, I'm kidding. It's so long, so we'll go with Chutes and Ladders.
Oh my gosh. Yeah, Monopoly, since it always took so long, my family never wanted to play it with me. Like, I would be like, can we play Monopoly? No, the game takes too long. So I'm still a little bitter about that. But
Connect 4 would be a good runner-up.
There you go. Oh, yes. That is a very good one. Yeah. I like Clue, I think, because actually the movie I was obsessed with as a kid. I basically have that movie memorized. And over Christmas, I gave my nephew, he's 9, the Harry Potter Clue, and he does the little British voice, and he loves Harry Potter. So that was really fun. All right. Next, what is your go-to karaoke song? If you had one, what would it be?
I would say Buttercup is a good one.
Oh,
yeah, that's a good one that gets the whole, when you're in a room with a bunch of people.
Yes.
I always think of Something About Mary too when I hear that song.
Oh yeah. So. Yep. Oh yeah. That's such a good one. I would totally sing along with that in karaoke. Mine would be Wagon Wheel. I like the Darius Rucker version, but I feel like that's another one that, you can get the group to sing, and it's about hitchhiking to North Carolina, which I now live in North Carolina. So little fun thing there. What's the best Halloween costume you've ever done?
I don't even know.
You've never dressed up for Halloween?
No, I have, but nothing exciting. I know this interview is not helping right now. Nothing crazy creative. No, it's usually just taking my niece and nephew out, but nothing even younger, nothing creative. I can't even remember, to be honest.
So. Yeah, no, my husband, he's such a just could I put a whistle around my neck and I'm, a baseball coach or whatever? Just, total low key. But for me, it would be when I was a kid, I was Elle Woods from Legally Blonde. And so I feel like I can relate to her in some ways, but also it was when the Taco Bell dog, they had the mascot and they
had the
little stuffed animal. So I had the little stuffed chihuahua with me too. Okay, back to something a little more serious.
Can I ask you a rapid fire question just to throw things off?
Oh, yeah.
Who's your celebrity crush?
I don't have one.
You don't have? I'll go first. Selma Hayek is mine. So
okay. Well, if I had to choose one, I would say Adam Sandler, because that's my husband's celebrity crush.
Okay, that's fair.
So I'll go with that.
I had to mix it up and kind of throw
yeah, you totally threw me off. Now I know how it feels to be thrown off. Now back to something serious. What would be your favorite market wisdom quote?
I'm paraphrasing Jesse Livermore when he says nothing changes in the markets. So, companies come and go, but human beings and human behavior, fear and greed never changes. So human emotion was the same 100 years ago as it is today, as it will be 100 years from now. So companies come and go, but human emotion, which really drives the market, never changes.
Yeah, some deep wisdom there. For me, it'd be something recent. So we had Mark Minervini on IBD Live yesterday, and he quoted someone. I should remember this since I'm bringing it up. But basically, I liked the point of buy tennis balls and sell eggs. So that was some great imagery there. So that stuck with me. A good recent quote there. Okay, well now let's break down some of your recent trades. So let's start off by looking at HP in the oil and gas area. This stock has been on a tear. Where did you get in?
Yeah, got in. I started with a half position. I like to sometimes start with a half position, especially in a tricky market. Right around $32. It was, let's say, early February as it was coming around there and building that sort of handle there. A little bit higher than that. Yeah, right around there. And then it acted very well and pulled back to that 21 day. So I added to it at 34 because I like to try to add if it's a little bit higher and acting well. And I try to combine as many factors as possible to help my probabilities of success. So strong sector, strong earnings and sales growth if you can, strong technicals. There was some unusual option activity, which helps give me a little bit more conviction. And it was acting well and just pausing on some light volume. And I just took it for a nice trade, sold the entire position right around 42 or so into that spike. I like to try to sell into strength. So when it ran up there, sell on like sort of those gap and the big up days, one of the O'Neill sell rules. So I took my profits on it. I currently don't own this position, but it was just a sort of a nice 25% type of gain.
All right. Well, what made you not want to go back to the oil well with the pullback to the 21-day line shortly after that? Just the severity of the drop that it had?
No, that's a great question. I was in other names. So I owned some other names in the group and I had a position in one of the ETFs. So I didn't want too much exposure, but it pulled back right to that 21 day, kind of retested, and it's been acting great. So I had no problem buying it back, except I was already in some other, I had plenty of other exposure.
And your reason for getting rid of the entire position instead of, leaving, a third or a quarter to run and maybe find support at that moving average, which it did.
Yeah, it's part of it's just the flavor of the markets. When you know the market's not, breakouts aren't working. I mean, except in energy and commodity related, they're acting like an incredible bull market. But when you know the market's a little bit shaky, that's where I don't mind. One piece of, if it's advice, guidance, or wisdom, is start with half positions because we tend to have more volatility. And when you have some profits, it's not a really amazing market, as we know. So I just said I'll take the whole profit and be happy with it.
All right, fantastic. Okay, well, let's take a look at a trade, perhaps that you had to roll with the punches with the market, but I think it all comes down to how you manage the trade. I mean, no one bats 1,000, right? So it's
Right.
how you
On Twitter, people do, but not in real life.
Of course, yes. Except, yeah, we keep it real on this show. So
we talk about losses. You learn a lot from them. So
yeah, exactly. Okay, so walk us through. Were you buying ACLS on the follow through day?
no, I noticed that in the second half of March, I was paying attention to that strong rally we had. So I was paying attention to stocks at new highs that showed incredible relative strength. So I just had it on my watch list. And a couple weeks ago on that pullback near that 21 day. So I didn't buy it on the follow through day. I waited for a pullback near that 21 EMA. It was right around 74-ish or so. On the pullback to that 21 day, I got in. And ideally, when you have those really strong relative strength names, you'd like to have it hold up higher in that range, higher up, maybe a high handle formation or something. But the good news is I started with a half position. It was like a 2% position, maybe 2.5. As I said, my full position's about 5. So I started with a half. And then when it just didn't act well, and you really want to, just from experience, have it hold up better in that range, when it started to pull back, I think I got stopped out like 66 a couple of days later. So it was like a 10% loss, but on a 2.5% position. Overall, it hurt the portfolio 20 or 25 basis points, like 0.25%. And you just pick up and move on. It's no big deal.
Exactly. Yeah, and I feel like that's something that a lot of traders struggle with is being wrong and giving things too much room on the downside instead of just getting out. Maybe it'll come back, but maybe your timing was just off,
Yeah, I mean, I've been doing this 25 years. I'll be honest, the first 12 years or so, I struggled with that shoulda, coulda, woulda. You don't want to take a loss. You don't want to make a decision. You hate the ones that you get stopped out of. It happens to all of us. They turn right around. But the more you do this, the more you're able to make decisions and build that mental toughness. It's not fun. You just become immune to it, and you know it's part of the process, and you take losses, and it's okay to be wrong, as they say, just don't stay wrong.
Exactly. All right. Well, this was a lot of fun. So thank you so much for having some stock tales with me today, Joe.
Thank you. I really appreciate it.
All right. Thanks everyone for watching, and I'll see you back here next week.